I want to welcome everyone to Global Markets Radio Week Ahead. I'm your host, Andrew Spanton. Sunday, February the 5th, 2012. Market just opened 5. Right now we got about 5:08 p.m. Eastern. Euro selling off a little bit. Dollars rallying a little bit on the open. You look at the S&P 500. We have a big week ahead, people. Big. That's B-I-G, if you didn't know how to spell it. Oh, baby. Big week ahead. Not U.S. numbers. We have rate decisions coming out of Australia, ECB, MPC. Got Canadian numbers. Canadian Ivy on Monday. Building permits. Trade balance at the end of the week. Lots of good numbers. And then, of course, we have the whole Greece situation, which I got to tell you, it's incredible how the media is able to lie and to get away. And the markets are able to get away with what everyone knows is coming. And that's a Greek default. Do you realize this weekend, and again, so far right now it hasn't been signed, but apparently the Greek parliament lawmakers are willing to accept the austerity measures that the Troika, Germany, IMF, ECB, is demanding. And these are not your normal austerity measures. They are looking to cut the vacation time. Now, if you've been a listener of mine, or if you follow if you know macroeconomics, global macroeconomics, you know this has been a story of the southern states for a long time. They love their siestas. They love their 5 weeks paid vacation. They love their time off. And they don't love to work their asses off. We know this. And the Germans want to take it away. Or at least part of it. They're going to accept it. Because it's almost like saying, someone who is desperate for money, they'll say anything. They'll do anything to get it. Anything. Look at the Euro weekly chart. Still looks pretty good. So the markets are going to believe that the Greeks are really going to go through. The Greek people are going to really go through with this. I don't think we hit that channel line. I think this channel line is more likely. That's my 136 level. And again, I am such a freaking bear on this euro, it's not even funny. Let's wait until I'll get bullish if we just end up with the Deutschmark. That's the German currency. But as long as these southern currencies are still involved, it's a piece of crap. And my whole point that I'm trying to get to is we have an election in April in Greece. Remember, Greece is very small. Italy is so much more important than Greece, but it's more of a psychological factor. The head of Deutsche Bank, Ackerman, if Greece deal does not go through, you opened up Pandora's box. This is the head of Deutsche Bank. This is Germany's biggest bank. This guy is the deal. He's the man. And I believe him that he says if a deal is not done or allowing Greece to go out of the euro, allowing the situation not to get resolved just with Greece is basically a domino effect. And I'm telling you, they're going to take this money. They're going to agree whatever the Germans want. And then we have an election in April, and you watch. They kick them out. There's a revolution. Maybe they go socialist. I don't know. But they are going to be against the euro. And there are going to be riots in the street. That is the time, April. The April elections. Yes, we have other milestones coming up. This situation is so not gone. Think about what's going on in Greece. The Orthodox priest What was my quote? I had a great quote. I put it on Facebook. Hang on. I put it on Facebook. You can read about it. Amazing quote that the Greek people will never accept these austerity measures. Incredible. Here. This was on February the 2nd. Schäuble out of Germany. We can't pay into a bottomless pit. Greece needs a new program. There's no question about that. But Greece must create the conditions for it. Now, again, what that's saying is they've got to do austerity. They've got to change their evil ways. More austerity risks triggering a social explosion, the head of Greece's Orthodox Church said February 3rd. We are being asked to take even larger doses of a medicine that has proven to be deadly and to undertake commitments that do not solve the problem but only temporarily postpone the foretold death of our economy. It's almost like, you get an increase in your credit line, but you're not going to be able to pay it back, and you're going to lose the card. It's terrible. I'm telling you, this is not good. So this rally in the euro, this is the big, big opportunity, in my opinion. We're going to spike up. Who knows? Maybe we do hit that channel line 139. I don't know. But I do know the summers are hot in Europe. We have a cold winter. It's going to be a hot summer. And I'm telling you, riots abound, austerity measures continuing. The U.S. economy, let's say, is going to be doing better. What about the jealousy factor? What about the jealousy factor? What about the fact that, hey, look at the U.S. and we're lagging behind? I don't know if that's going to happen. And again, this non-farm payroll number we had, while great on everything across the board, good. I want to see 3 months in a row of this. Because last I checked, the unemployment rate is still at the highest level going into a presidential election since the Great Depression. So there might be 250,000 jobs that are added, but there's still 87 million people not in the workforce. 1.2 million just said, I give up. So you want to look at this number and say, oh, great. That's fine. And on the surface, it was a great number. But are we going to get a sustained type of increase in jobs? I don't think so. But one of the things that we continue to hear from the Fed, and we continue to hear from everyone, things look okay. Without a shock to the system, the U.S. economy is very frail right now. It cannot handle a shock. And that's what I think is going to happen. There's going to be a geopolitical, Iran, Israel, something, Syria, Russia, more involved than we know now. Russia is the puppet master. And I don't think anyone really understands that. The role Russia has been playing. Syria, North Korea, Iran. And then, of course, we have the European situation, which is not going away anytime soon. Oh, no. No freaking way. So we look at this sterling dollar weekly chart. We do have numbers coming out of cable. Obviously, we have the big rate decision. I think they might even increase their credit purchase facility. Tonight we get Australian retail sales. I mean, cable, it looks like it's going a little higher. No reversal. Weekly chart still looks good. And I think tonight they're going to pull it out. How's that? They're going to pull it out. There's almost no doubt in my mind. Nice little hammer here on the weekly. Dollar yen. And listen, if the U.S. economy is coming back, this dollar yen is a slam dunk buy. Obviously, Bernanke increasing a year low rates. But let me ask you a question. Do you really think this guy, if jobs are coming back, the economy's ripping at 4%, 5%, you think this guy's going to hold to his promise of rates low until the end of 2013? Are you out of your freaking mind? So it's a joke. It's almost like now you get to guess the Fed, and then we're going to find out immediately if we're right. We don't have to wait for the minutes. He's going to tell us right away. He's going to have to change. What do you do with a central bank that reacts more than it should? What do you do with a central bank that maybe reacts to numbers every couple of months? That's not a slow and steady Fed. That's a Fed that doesn't know what the hell it's doing. Flying by the seat of its pants, going with every number. I don't necessarily love this transparency. I got to tell you. I didn't love Greenspan. I thought he could have been more transparent, but I don't think the Federal Reserve of the United States needs to be so transparent. So anyway, this dollar yen, it's all about rates. You get continued good numbers out of the U.S., it's going to fly. It's going to go. I'm looking 85 easy. 1,000 pips. Easy when it finally rips. Doesn't look very good now. But 85, that's a slam dunk, baby. Intervention, I still say intervention is not going to happen until it breaks down one of these. They'll come in, but I don't know. I don't know if they're going to intervene from these levels. You know, one of the things I've been continuing to say, with high oil prices, look what the strong yen has done. Look what the strong yen has done for the Japanese. It's helped them. They import almost all their oil. They don't produce a freaking drop on their continent, maybe offshore, but nothing. They import too much. So this oil, strong yen, has been very helpful to their recovery. You get a weak yen and oil goes up, wow, that's going to really hit them big time. Dollar Canada, we had a terrible jobs number, but once again, you see Canadian dependence on the U.S. economy. That's the bottom line. So, U.S. doing well, that is amazing for Canada. More homes, more cars. So we saw the Canadian act like a Looney Tunes. And again, commodity currencies, risk on, and this hourly chart. We get to 90 easy. 99, easy. Question is, do we melt? And I got to tell you, it would be so classic. Bad number, bad numbers, and dollar Canada goes down. Go figure. But the chart looks terrible. It's going lower. Dollar Swiss looks great to the downside. Weekly chart, a little up, no big deal, but it came down nicely. I think we want to sell any strength. I don't think we take out 93. I think we could roll back down big time. And again, this news tonight is important. The Greeks are going to probably go along with it. There's going to be good news. And this rally might last a couple of weeks. But that's it. No more. Because net, there's still a lot of uncertainty. The problem has not been solved. There's going to be revolution in Greece, 100%, and a 70% haircut. Let me tell you, who knows what that would mean if Portugal bonds, all the other pigs, all of a sudden bondholders looking at 70% cut in their holdings, even though they're not worth that now, but still, that's a big haircut. Aussie, retail sales tonight, I think, are going to be on the weak side. I think Aussie comes in, but it's a buy on pullback. Again, I'm expecting this news to come out. I'm expecting it to be a euro explosion. I'm not looking to buy it here yet because, again, this thing is not done. It's not done. New Zealand looks great. Again, these things are so overbought. They're so due for a reversal. I've been saying all along the stock market, second week in February. Have I not? Well, we're coming into the second week in February. And if we're not set up for a gorgeous turnaround Tuesday, let the good news come out. Let them explode this damn euro. 400 pips in 2 days. Hit our channel line, and then bye-bye. Let the S&P hit freaking 1370. I don't care. It's going up. But do I think we're going here? Which is if we, listen, we take out this highs, and we clear the tower, we're going to 1450. Maybe higher. I don't think we're going to clear this tower. We might stall at, here, but we're going to stall 1370. But we need that outside candle. We need that up 200 down on the day moving the Dow. That's the signal, baby. Crude hanging in tough. Again, the Israeli situation, in my opinion, coming into play. We got German factory orders tonight. Also, Canadian IV tomorrow. Big number there. Halifax House Price Index in London. We get to see Switzerland foreign currency reserves. Very curious to see that number. That's at 3 a.m. Eastern. That's a mover. German factory orders probably going to be good. They were down 4.8% last month. No U.S. numbers. And then we get a rate decision. Australia expected to cut rates. I mean, come on. I'm short the Aussie. I went home short it. I got to have everything. That's all I got. Australia's expected to cut rates. Will they cut and say they're done? One and done? Or are we going to continue to go lower? $10:30 p.m. Eastern, people. And guess what? If you're not premium, you should be premium for that. And you want to try a 1 week trial? You should try it for that. Because news is going to be big. You're going to need me. Oh, yeah. You need me right now. But hey, $200 a month. Or $1,300 for the rest of the year. Pretty good deal. So, where do we go, Andrew? I think, again, we're going dollar up. S&P is going to be down tonight. A deal's going to happen in Europe, and then we explode. Something like that. I think Australian retail sales aren't that good. In line to weaker. Dollar goes up. Risk off. And then some sort of good news in Europe. So, again, people, remember, like me on Facebook, Voice of Forex. YouTube, Voice of Forex. Twitter, Voice of Forex. Because as you know, and by the way, there is still game time. I am willing to bet subscriptions on the Giants. I'll take the Giants, you take the Pats. So anyone, you might not have this in time, maybe, who would like to bet a year subscription, a month, I'm in. I'll take the Giants, baby. I might even be willing to do no points. Email info@globalfxllc.com. I'm on Skype, Andrew.Spanton1. Feel free. Connect. Andrew Spanton, Global Markets Radio. Big week, people. Get ready. This could be it. The only voice you've ever needed who truly loves to make you money. Have a good week. Check my recaps. Check my Twitters. Good night.